Why don't we just go straight into it? I'm pretty excited. I know for me, I've spent a lot of time thinking about the tax structure of my own business because it is, after all, one of the bigger expenses, maybe the biggest expense that most entrepreneurs will have
It really
over the
is.
course of maybe their entire careers. It's something that you can never really get rid of unless on day one you're trying to be as intelligent with the structure as you possibly can. And you're someone who, frankly, knows their way around the tax setup. You know your way around how to make sure that online business owners can mitigate tax expenses and optimize their back end. So with that being said, I just want to introduce you to everyone who's going to be listening. Alan, super stoked to have you here. And yeah, if you want to just give us a bit of a background about yourself and then go straight into it, would be really keen.
Yeah, guys, and thanks so much, Lloyd, for that introduction. Appreciate it. And for all you listening out there, my name is Alan Cheng. I'm a CPA, certified public accountant here in the States. I'm located in Los Angeles, California. And welcome to this free cash flow agency and a track and scale partnership webinar that we're about to have. So in today's webinar, I kind of want to just teach you guys one really important lesson, like Lloyd mentioned, about taxes, right? And more importantly, how to keep at least 50K more in profit by reducing your taxes, right? Profit, we're talking about profit, which is your bottom line here, not just your revenue. And then you can all do all this while having to, learn complicated tax codes or even needing an accounting degree, right? So if you're running a coaching business, an agency, consultancy, or selling courses, these tips are seriously going to help you protect the money that you made over the past year and into the future. So yeah, let's just jump right into it. Hopefully you guys see the screen right now that I have right here. So this won't be some long drawn out webinar. No, this is going to be some real actionable information here in the next like 30 to 45 minutes, depending on, if we get questions or not. But first, we're going to basically do these 3 points here, right? We're going to learn first about, key deductions and business strategies to reduce your tax by potentially up to $50,000, depending on your revenue level, when you take these few secret deductions that we're going to introduce to you in this webinar. Secondly, I know there's a lot of international sellers out there who maybe not be located in the States. And so the second point is for all you guys out there, and it's really to teach you and to educate you on, how international eCom or agency sellers can benefit from having a US LLC entity and how it can actually help you, create other streams of income from your cash flow. And we'll go into more on that second point too. And the third is, you made all this money now, right? You have a healthy cash flowing agency or coaching business. How can you use that now to diversify your cash flow? How can you use that to make sure that if any part of your business does not work as intended in the future years, you're well taken care of? And that's really what we're here for, our free cash flow agency. We're here to educate and make sure that, you guys all going to be running really successful businesses that's very long lasting and, just going to be very beneficial for you in the future. So yeah, if you guys are spending time listening to me, I hope you guys can gain this knowledge today. So yeah, just hold me to this. So let's start off with some testimonials that we have, just some very light ones. We can go over them pretty fast. So let me just say that, first of all, that the more money that you're making on your top line, these strategies are going to be even more effective. So keep in mind that a lot of our testimonials are just happen to be in the e-commerce space, but we're basically honing in on the strategies that are 100% applicable to you guys who are more on the coaching agency side listening in right now. So for example, this is Michelle. Michelle came to us and she runs a beauty e-commerce company. And even though she was already working with CPA at the time, she basically the CPA is one of the types that's I would say like just a tax preparer, right? All he was doing for her was, hey, give me your numbers during tax time, which I'm sure you guys all know is around April 15 in the US. And then he would do it and be like, yep, here you go. Here's what you got to pay. So, Michelle was pretty confused on what form she needs to fill up because she doesn't have an accounting background. And she really needed that professional guidance all the time, all year round. But no, she basically the accountant just fill out the tax form for her, tell her how much she had to pay, and then just disappear. And then she'll see him again next time. Right. So she was actually having a hard time grasping why she has this tax situation. Why does she have to pay so much? Because she was just not receiving very good communication with her CPA. And basically, she also had a terrible profit margins for her growing business, but that CPA was only taking care of her tax preparation and nothing else. Right. So she didn't know anything about that. So when she came to us and we're able to diagnose her situation, We were able to more explain to her what her situation is, where her tax savings actually come from, and where her additional tax savings should be coming from that the CPA didn't even look for. And we really gave her instant access to us anytime, right? When we have a client, we actually set up a dedicated Slack room for them, so they can really just ask us anytime. We see us more as an outsourced CFO source for these guys. So if these situations kind of sound similar to what you are facing, then we can definitely help you also get more tax saving back starting today. So next we have Adrian. Adrian is actually an American, but he's living in Japan, right? And he's actually a content creator. So he actually is a gaming content creator. You can find him on Twitch. And basically, he was looking for us to basically give him a game plan for his taxes, given the additional paperwork you have to fill out when you live overseas. And as a US citizen, there are rules on nexus, residency status that he needed to read through. And it was just a painful process for someone who just wants to use his creative energy to continue to produce amazing work for his fans. So when Adrian came to me for help, I knew that there was one key tax credit he was missing: the foreign income exclusion credit, right? It's really powerful. If you guys haven't heard of it, who are US citizens working overseas, it basically allows you to exclude up to 107,000, I believe, now in 2021, of income he earned overseas, given that he lives in Japan for 11 out of 12 months of the year, right? So he more than able to qualify for this because he lived in Japan all year round. So along with other deductions we're able to get him, he ended up saving $22,000 in tax liability from one credit that we just mentioned above, and $52,000 in total savings across all his tax accounts. So now he's equipped with far better understanding of his tax situation. He was able to confidently expand his reach to other social media platforms. I think he's also on YouTube now, while being watchful of all the useful deductions, right, that we walk him do, because we basically send it to a tax recommendation report. So if that's something your account's not doing for you, you should see if you can ask for it. What tax recommendation report is basically a report that says, okay, you run this type of business. We understand your business completely. We should be able to recommend you all the steps and other things you should be doing along the way to get you back to maximum tax saving that you deserve. You really don't want to give any free money away. Okay, and then next we have Anthony. So Anthony is a developer. He's actually a full-time developer, but he also runs a kind of a programming meme clothing store on the side. And he absolutely hated dealing with the accounting for his business, but he knew that he needed to learn this information and work with a CPA. So he was struggling on, how to manage his bookkeeping, how to figure out how much deduction he can take. And, he always get hit with a huge tax bill. I had no idea why he's paying so much. So we fast forward to present day when he's working with FCF. He's now, more confident and to expand his online business, knowing he has always someone watching out for his back, knowing someone watching out for his finance and his tax situation. So in the first year that we're ready to work with him, we're able to get him back $30,000 more on his taxes the first year he was with us. And because we're able to take advantage of a lot of deductions and filing and corporate structure statuses that he qualified for. And he was able to expand his business by actually more than 200%. So it's really about the confidence, I would say, sometimes, right? I think a lot of times when owners come to us, they have that little thought in the back of their minds, like, oh, shoot, I'm gonna own so much taxes when I expand my business. Maybe I'm a 6-figure business right now. I'm trying to go to that next level. I'm trying to make it 7 figures. But how much tax am I going to owe? And that's something that's really troubling for a lot of these guys that come to us. They really tell us, I have no idea. I have no idea. That's the number one thing they say. I have no idea. And you don't want to have that feeling, when you're growing your business, that you have no idea where some of your money is going to or how much, right? So in any case, after working with us, we're able to unlock a lot of tax saving for him. He's able to also free up a lot of his time now because we're able to structure his business in a way where, he doesn't need to be working really late hours because he has a full-time job doing on the side. We're able to help him also structure his business in a way where, he can depend on VAs to also run some of his stuff. So lastly, we're going to talk about Tracy. Tracy is actually one of my more of recent clients. She's a Canadian and she has an LLC in the US, right? And her specialty or her niche, I guess, is selling K-pop merch, which, as you guys may have heard, K-pop is huge right now with BTS, Blackpink. So she's actually doing really well. With her, she came to us, was very disorganized. She was months behind on her tax bills for her federal and state income tax. And she was kind of going to do it all by herself. That's kind of her thing. She's a little bit untrusting of other people. So she tried to do all herself. And she was faced with a pretty high tax bill. I think it's around 24. And her state was tapped. I'm just estimating all of these. These are not exact numbers. So since the 6 months that she came to us, this is what we're able to do from her. Her tax bill that she was able to figure out herself, she just used her own, I think, TurboTax or some software to figure it out. We would just knock that down from 30K to 14K, getting her back $16,000. And this is pure money, guys. This is not just some paper money. This is money that she's not giving away from her bank account. So this is actual money she did not have to pay to the US government. We also organized her bookkeeping and found K-pop items she was selling that did not have high margins, right? And we advised her to eliminate those items to keep her profit margins tight and high. So she actually increased her profit margin from 13 to 19% that year. And then lastly, we managed to go through the domestication process with her. So if you guys haven't heard, domestication process is basically an LLC term that says in certain states in the US, there's ways to basically have a reciprocal relationship, right? From one state's LLC to another. So she was originally registered in the state of California. And if you guys live in the States, California is one of the most expensive states to actually have an LLC running. So unless you guys are a resident of California, like I am, and have no choice to start a California LLC, I would not recommend it. I would recommend you guys go elsewhere to pursue LLC. And that's what we saw. She had to pay a lot of LLC franchise fees to California. So we help her with domestication process, which means that we move her California LLC to Wyoming one. And if you guys are international out there, you know that Wyoming and a couple other states like Delaware, Nevada are some of the best saving states you can get as far as the lowest fees. You get being the anonymous status. So that actually saved her tens of thousands of dollars, and not exaggerating, tens of thousands of dollars just from that one switch that we were able to help her with. So furthermore, that also took away her sales tax obligations. So for eCom owners, with inventory, they have to worry a lot about sales tax, right? And if she had kept her business in California, even this year, she would have to pay another $24,000 in sales tax given her revenue level. So as you can see, when we say that we pitch ourselves more as an outsourced CFO firm, we really mean it, right? We really look at all aspects of your business and really try to look at your holistically, your business operations and strategies to take your agency to the next level by ensuring you stay compliant and have the knowledge to keep all that hard-earned profit you deserve. Okay, that's great. So you may be kind of wondering, he said all this stuff, but why should I be listening to him in the first place? And why should I even continue to listen to this webinar, right? So let me give you another little introduction about myself, a little more in depth. So like mentioned, my name is Alan Cheng. I'm a certified public accountant. This means I've reached the highest level possible in the field of accountancy to act as a trusted financial advisor for businesses across the United States. The purpose of a CPA is basically to help individuals, businesses, and other organizations plan and reach their financial goals through smart tax planning, accurate bookkeeping, and advisory services. And I've been working in the areas of accounting, auditing, and tax planning for over 10 years now. I started my career at Ernst & Young, which is one of the big 4 accounting advisory companies in the world, as it was just giving me exposure to some of the biggest companies in the world. So you got to think about this as like Fortune 500, multi-billion-dollar companies, definitely 9 figures, 8 figures and above. And it really giving me the insight on how these companies keep accurate records and save money on their taxes. And trust me, when you're that big, you kind of know all the tips and the tricks in the books, right? And this also gives me the skill set to help you guys too. So I would say, first of all, when you guys go out there looking for help for CPAs or accounting help to help with your tax and bookkeeping, not all CPAs are created equal, right? So a lot of CPAs are generalists, so they take on all kinds of businesses, or some are focused on one niche and one niche only. And that's kind of like what we do. We only focus on online business owners. So you may be asking why that's an important distinction. And I would say, let me give you a little analogy of that, right? It's like, if you're playing tennis, right, if you will, would you hire, Roger Federer to be your coach or Michael Jordan, right? They're both top of the game, but if you're going to be playing tennis, there's only one right answer here. You're going to be hiring Roger, right? Because he'll be the one that knows you inside and out, knows the game of tennis inside and out, and can dissect and give you the most insightful advice on your tennis game, right? I mean, Michael's a GOAT, but that's in basketball. I don't think he's a GOAT in tennis, right? So you make sure, when you guys go out there, hire someone that holistically and wholeheartedly understand your business so they can help you the most, right? So like I said, this agency started by me and my partner, Stanford, who's also a CPA. He has worked in more in the media side of the world. So he has worked a lot of these big names that you see here, Warner Brothers, Walt Disney Pictures, and Paramount Network. and he's more focused on the operations, and he's very, very good at forecasting work. He's very competent at modeling, and he's very good because he work on M&A deals also. So if that's something that you guys see in the future for your agency or your business, that's something that he can also advise you on, is how best to prepare your business for an exit in the future. So that's just a little bit going in the background, and hopefully that interests you enough to keep going. So we're about to share some amazing tax tips for you guys too. So I'm sure if you guys are on this webinar, most of you are going to be part of Lloyd's group, right? And Lloyd, is a great teacher, a great mentor, and I'm sure he has taught you guys very well on, how to get leads and sales. And I'm sure you guys are all running very highly profitable service-based business, right? And I'm always very impressed with the service side business, because usually they have a little bit much higher margins than the econ side, of business that we talk to and clients, because you guys don't have inventory, right? Everything's more digital, so that's great. You're probably selling courses, you have very high margins because you're just working with other people. So if it sounds familiar, you probably have some VAs that works for you, staff, a lot of software costs, and possibly some ad spend, right? If you guys are doing the whole paid ad model, or you're doing the social organic model possibly, right? So if this sounds like you, this is what we're going to focus the rest of this webinar on. So this is something that we see typical for a financial, right? You have a really amazing top line number that, you probably, you see in forums that people are screenshotting, like, yo, I made 300,000, look at me, right? And then, they're very impressed with, hey, man, I just hit 1 million. Look at this, right? So it's very standard financial we see, and then we have all the deductions, VA costs, full-time staff, software costs, Facebook ads, if you run ads for your agency, transaction fees, and then net income. And usually when you only focus on this number up here, you don't notice all these things. And if you're not doing very good bookkeeping, if all your data are scattered, right? If some of your data is in Shopify, if some of your data is on a Facebook portal, if some of your data is you're just keeping track on an Excel spreadsheet because you're, your VA, that's not the way we really want to educate our clients on, right? The reason you do good, clean bookkeeping is you have everything in one place, and you can do a lot of margin analysis on it. And you can see really what is that bottom line, what is that profit, and how much tax are you going to get hit with on top of that, right? You really want a clean bottom line number. If you're putting so much effort into building this business already, why would you let the government just take your money away with high taxes that you may or may not have to pay for your business? That's kind of what we're doing here. So why tax planning, right? So number one is it's free money. like literally it's pure profit when you know your numbers and your tax numbers, and you're not paying more than you have to. So when you're taking advantage of key tax deductions that you qualify for, 100% qualify for, it's literally free money that you're getting back in your business. You're basically taking money that the government was going to charge you and putting it back in your pocket. It's not like a transaction fees. There's no transaction fees on top of it. There's nothing else on it. It's simply because the tax code, you're getting this money back. So like how would an additional 25K sound, to fix up your house or go on holiday right now, or just, reinvest in your business because you will be missing that cash to really take it to the next step, right? Or expand it to another course or another program that you want to run. And second thing is just you save some money in order to pay the taxes, right? So a lot of you guys out there are probably worried, like, hey, I made this money, but I don't know how much I need to keep to pay the taxes. Like that's a problem in people's head. They're afraid to use the money sometimes because they're like, well, do I keep a nest egg of $5,000? Do I keep $10,000 around? I don't want to be at the end of the year and not have the cash flow to pay the taxes. So that's something we would definitely be able to, educate you right up front. It's like, hey, all you need is this amount XX here. Rest of it, do what you want with it, expand your business, go on vacation if you want, and you don't get caught in a situation where you're doing it yourself, estimating wrongly, and don't have enough cash to pay the IRS, right? Yeah. Like I can tell you guys, the IRS will come after you, especially as you cross the 7-figure mark. So don't assume that you can just get away with, not doing your taxes correctly or just not doing it at all. The IRS doesn't go away. If you don't file and pay taxes, you may be thinking, oh man, no one sent me a letter, right? The IRS actually has no time limit. I don't know if you guys know this. They have no time limit on collecting taxes, penalties, and interest for each year you did not file. It's only after you file your taxes, then the IRS has a statute of limitation of 10 years to make sure that the amount you're submitting to them is accurate. Or if not, they'll try to collect the difference and, you know, put on penalties and interest on top of that, depending on how long you've been not paying that taxes for you. So just we want to make sure that you guys are aware that you don't want to pay interest and penalties. I know you guys may be thinking, it's okay, I have the cash flow, right? But you know, the IRS interest rate is basically the federal short rate plus 3%. The rate is set every 3 months, but guess what? It's compounded daily. So every day you don't pay, that interest is keep compounding every day. So they don't joke around when you continue to ignore your taxes. So you may have more than you have to deal with. So take IRS notices seriously. If you guys are in a position out there where you're actually trying to, you know, actively avoid it because the taxes is the last thing you want to think about, don't ignore the letters, please. If you get an IRS correspondence, you know, make sure you go and see a professional for help so they can kind of guide you on what to do, right? Okay, and the last thing is, you know, tax planning happens on an ongoing basis, right? So you can't, I like a lot, there's this misconception out there that, you know, around April 15 is when you guys should be worried about taxes. You know, I just gotta get everything to my accountant a month before and they'll take care of it, right? So that's a huge misconception. That's just something we've been telling our clients and other people who are listening to us, who DM us, like, don't only do taxes on April 15. You know, as a business and not an individual, the IRS expect you actually to submit your taxes, get this, on a quarterly basis, if you guys don't know out there. So you guys should actually be looking at your taxes and saying, hey, how much should I be paying as an estimate of my January to March revenue? How much should I pay as an estimate of my April to June revenue? They're expecting payments in that interval. And what happens is at the end of the year, if you're not doing that, you actually going to be faced with what they call underpayment penalties and interest, depending on your situation. And that's really, again, free money, right? Free money you're giving to the government. And if you guys remember, the whole point of this webinar is we don't like to give money away for free. So just want to walk you through these 3 things on why tax planning is important. I know it's not the most exciting topics, you know, if you guys in Lloyd class that you guys are learning, but this is actually highly important. And you can see the tax savings and the possibilities are really in the 5 figures or above range. So it's not something you can just take lightly and think, nah, not something I need to worry about. I just whatever tax I need to pay, I'm just going to do it, right? So I want to show this screen up here is because I'm sure you guys have heard about these super rich people, right? I'm sure these guys are the most recognizable faces as far as startups and in the tech world, right? We have Amazon owner, we have Warren Buffett, we have Elon Musk up there, and there's always these stories about these guys who are able to not have to pay so much taxes, right? There's like these big headlines like, oh man, Amazon had to pay 0 taxes. Like, how are they doing this? Is it illegal? You know, and then all the stuff about that. It's like, no, it's not illegal, because if it's illegal, the IRS will be going after them at this point, right? It's not illegal. It's just that they're able to afford a ton of lawyers, a ton of accountants, and they're like, they're gonna scrutinize every single part of the tax code, and they're gonna find the most gray areas of it and say it applies to me, right? And then that's the reason they're able to get away with this. You know, you would think that if they're doing anything illegal, right, like an Al Capone, like a gangster who's like not like trying to avoid the IRS, and like, no, these guys are running very big businesses. They're obviously not under any investigation, and then but then they get these big headlines saying they're not paying anything. Like why? It's because they know the tax code. It's because they understand how the IRS works. You know, that's why they're able to get away with it. And that's something that I feel like you guys need to understand. The tax code is the same for everyone. It's super long. It's super hard to read, but it's the same for everyone. And understanding it is the key to not be screwed. Like we have seen some companies who just pay their tax bills every year thinking this is the amount. That's it. I'm just going to pay it, right? Don't be like these guys. That's what we really want to hone in on. So some misconception we want to go over, right? Like, I'm sure when you hear that, you're like, I'm not an Amazon, you know, I'm not a Tesla. Like, why is this guy talking about me, right? So one of my first misconception is I'm a small company and I can't get access to these tax deductions, right? So like, you're like, Alan, this doesn't apply to me. I'm not a Tesla. I'm happy with my growth. You know, I'm a 5, 6 figure, 7 figure guy, but this is not me. But actually, like I mentioned, every entrepreneur is entitled to the same tax code. It's just a matter whether you are educated on it and know how to use it. Knowledge is really power. Like for everything else, knowledge is power. The only difference is big companies, they hire a massive amount of expensive accounting lawyers, as you mentioned, that helps them with this. That's really the only difference. Second thing is, you know, when my CPA account just give me the tax bill, I should just pay it. bottom line, right? I'm sure a lot of you guys are out there just doing that. So if your accountant is not familiar with tax for online business, you may be actually just paying them to fill form for you, right? We have a guy to come and tell me that, they just want to shortcut it and they just hire some guy on Fiverr. Like literally just hire some guy on Fiverr to do their taxes. There's a lot. Fiverr is great, and it's great for a lot of other things you may be doing, like you may be getting a logo, some graphic design work, and other things. I always say this is one of the things you don't want to do. Another thing may be running your Facebook ads. You don't want someone on Fiverr doing your taxes. Something as important as that. That's not what you want to do. A proper CPA, especially one that understands online business, is going to understand your ad spend. It's going to understand your VA costs and able to plan ahead for you. And further importantly, I'm not sure if you guys are aware, they're able to internally do a comparison of your business versus other similar agency business or other similar eCom business out there and say, this guy, person A or Jack is getting this much. Why aren't you? What's the difference? How can we also get him to be like Jack A? That's one of the key things you guys are missing. If you are just running a generalist business, you're not getting that. You're 100% not getting that. And the third thing is, like we mentioned, you should only worry about tax at year end, right? So if you imagine you're making like, you're doing 7 figures, you're probably like in cloud 9 right now, you have 70% margin. That's like, and you're looking at like, man, I'm making almost $1 million or something, right? And you really should not be the type that says, and we have people to come to say, hey, I make enough, so it's okay. I give some away, charity, whatever, right? No. If you really care about your business, if you care about that 1.4 million is not your ceiling, right? If you're a type of who's driven and wants to hit the 5, 10 million, 50 million mark, you do not think like that. You think like that, you're going to be leaking so much money early, and that's just not something that you want to do. Sorry, just move on. Next slide, accident. Here we go. Okay. So, what might be the reason that you have these misconceptions, right? So, honestly, the tax code is complicated. I even can say that as a CPA, right? IRS is very complicated. We had to go do a lot of education, in school, and then, passing the CPA exam, which is rigorous, to really understand some of the tax codes. And that's also why we are dedicated and focused on just one niche, right? Because honestly, if I was a generalist, I couldn't possibly understand like the 15, 20 different type of business out there, all the brick and mortar stores and all their complications and other type out there, right? I would be split. I'll be like, okay, I can only do like, very simple stuff for you. And that's what you get with generalists. But if you're laser focused on one niche, you're like, okay, I just need to educate myself 120% on you guys, online businesses. And that's kind of what we did, right? So this is kind of why you guys are having this misconception of, that it's hard. Tax saving is not for me. I need to be much bigger. But no, don't think like that. Know that, if the rich people are getting away with it, you guys can too. It's the same tax code, all costs. So what's the opportunity cost of not educating yourself, right? First of all, you probably have to pay thousands of dollars later on to a CPA for just consulting of, hey man, I'm like 5 years back. What do I do now? And then that CPA probably doesn't even understand your agency consulting, coaching business model. That's even worse because maybe you're in a rush. You're just picking the first guy you see in your Google results, or just a guy you see on Fiverr or Upwork to do it, and they don't understand, right? And there's so many out there. How do you tell that person is good for your business? And third, you're kind of literally throwing away thousands of dollars you already made, like thousands of dollars, tens of thousands of dollars at times, depending on your revenue level. And four, of course, you won't be able to take advantage of tax deductions. If someone's not telling you that, if someone's not telling you this is the way to run your business, right? These are the secrets that you're learning to run your agency business. That doesn't open your mind up saying this is the right way to doing things, right? So you guys got to learn, just like everything, just like how you're running your agency business, you got to understand how the game is played and educate yourself. If you don't educate yourself, these are kind of things you can be facing. So I just want to emphasize this slide. It's not only that, it's the complications that comes from, just tax forms and all that, right? So tax forms are already just so many out there, right? And it's confusing, it's troublesome, and everything just seems foreign to you. And then you guys don't really have time for that, honestly. Like if you guys are focused being on the founder or CEO of your business, you guys should be the founder CEO, right? As you grow, I'm sure you're learning that, right? You should be trusting your team. Like if you have a team of VAs or even full-time employees, you'd be trusting them to work on what their strength is, right? Whether it's website optimization, whether it's ad spend, whether it's outreach, right? This way you can just be the face and be the guy who's figuring out strategies to grow the top line of your business. And this is kind of what it is. It's like, it's the same for accounting. Like, you don't want to be like, okay, I'm just gonna do my own taxes sometimes. I mean, it depends where you are. If you're just starting out, that may be a good idea for you, honestly. Maybe you just need some education, watch some YouTube videos and hope it's the right information and go with that. But if you're at a certain point, I would say like 300K is a good mark. You guys should really be like, is it still worth my time to do this and spend so many hours and get through all the complication? Or is it worth just reaching out and then so I can just keep working on focusing on growing my business? So now we're just going to go into what we promised on this webinar is we're going to give you these 3, I would say, tax secrets or accounting secrets that's really going to kind of open up your mind eye, I would say, right? That third eye of why it is so important and to really understand these things. And trust me, these are just a few things that we're going to highlight for you. We can go much more in depth if you want in a future video or webinar, if this is something that just interests you guys. But we're going to jump right into it, right? So, because I know this is what really going to interest you and really you can be seeing why it's so important, okay? So number 1, we're going to learn how to reduce your taxes by potentially 50K plus when you utilize these tax deductions and exclusive business strategies, right? So we're going to highlight a couple for you, and then you guys are going to really see why it's important. So first thing is, I'm sure a lot of you guys out there hopefully are incorporated, like you'll have an LLC right now in the US, or if you guys are international, maybe you have considered or already done a US LLC also for your business. There was one thing out there that you may have heard or come across, but not really sure how it works. And that is the S Corp, right? I call it a super corp, right? The S Corp is basically I would say a hybrid between your LLC and what like big businesses are able to do, which is the C Corp, right? A C Corp, a lot more complications there. Obviously, it's the most complicated tax structure. And there's a lot of things such as like double taxation you got to worry about, right? Double taxation means it gets taxed on the corporate level, so your business level. And then whatever dividend or that you get as a shareholder of that company, you get taxed again. So a lot of time people don't want to do C Corp for those reasons. Excuse me. But then S Corp is kind of like the nice hybrid in between the two things, right? You get benefits of an LLC and benefits of a C Corp, kind of like the best of both worlds. So the reason why an S Corp is very important is, as a LLC, one of the things you guys got to do as a business owner, right? As a self-employed person, is you have to pay what is called self-employment tax. Self-employment tax, if you guys have worked a job before, is basically as an employee, you have basically had to pay half of that, right? Half of your Social Security and Medicare tax, which is around 7.65%. But as a business owner, guess what? You guys have to pay double that. So you have to pay around 15% of your revenue every year to the government as self-employment tax, so double. So why is S Corp so important? Why it may be considerable for some of you guys to switch over to an S Corp as one of the business strategies? Is an S Corp basically says, hey, I can be an employee of my own business, right? So as an employee of your own business, you can say, I need to pay myself a salary. That's right. You can pay yourself a salary. And whatever part is the salary for your own business, you can just basically avoid paying that portion. So basically, you again can be like if you're just work for a company and only pay the 7.65% again. So if you just do a little math in your head, say you're running $1 million business with 2 million, 7.56% of that is not nothing to scarf at, I would say, right? So by making yourself employee of your company, you're able to basically save a ton on self-employment tax. And that's, again, is just money back in your pocket. So you usually do need a CPA set up this complicated corporate structure. But if you just run some math, you can see how important and impactful this may be. And you can decide for yourself, this is worth it for you. I mean, there are some paperwork you have to do. LLC, I would say definitely simplest form of a structure, right? Entity structure for you guys set up. S Corp, a little bit more involved, a little more paperwork. But for a lot of business and clients out there, this is totally worth their time to go through this. Next, we're going to talk about the 199A qualified business income deduction. So as you guys, have lived through the President Trump era, I mean, one of the great things that he did do for everyone was, he really lowered the tax rate, I would say, for everyone, right? So as part of this, I'll just call it the Trump tax law, right? One of the things he introduced is this thing called the 199A qualified business income deduction. And it was his way of, trying to grab the small business vote, if you will. And it is a deduction. I don't know how long it's going to stay around for. President Biden haven't done anything with it yet. But basically, it's really important for you guys to know this, because if you guys can qualify under this, under the umbrella of being a 199 qualified business, you can reduce up to 20% of income earned as a deduction. Yeah, 20% of income earned as a deduction. So again, this is something that hopefully your account with CPA is looking out for you. But I bet that if you guys are just doing it yourself, you probably don't know about this, right? So this is exactly what I'm talking about. So again, if you do some simple math in your head, what is 20% of your taxable income right now? Of your business, of your past year business, or if you were doing tax yourself, taking advantage of this? I don't know. I can't answer that for you, but hopefully you are. Next, we're going to talk about how to basically defer taxes through some of these really powerful retirement planning platforms that's available to you as small business owners. So we're going to focus on these two, but there's plenty more out there. I want to focus these two because these two are really going to be, I would say, super crucial for agency out there. Why is that? Because agency owners out there a lot of time are, from what I'm seeing, are one-man shows, right? And a solo 401k, it exactly fits one-man show businesses. So if you're one man, a one-member LLC, or just a solo proprietor, this is huge. So solo 401k, if you guys ever heard of a 401k program, it's basically the US government's retirement plan, right? A lot of time, if you have a day job, a 9 to 5 before, you probably had a 401k. So a normal 401k as an employee, I think this year you can get about $19,500 as a tax deduction. And what you can do with that tax deduction is basically you can sock that back into a retirement account for you guys, right? And what that does is that $19,500 is now a tax deduction on the year's taxes for you, right? Which is awesome. If you were working as a full-time person, that lets you set you up for your future, and it also lets you have a tax deduction. Awesome, right? But let me tell you what's even more awesome. As a business owner and a single member business owner, you have what they call a solo 401k. And this only qualifies if you're a one-member LLC. Just keep that in mind, okay? Or if you have your spouse working in your business, that also qualifies. So that's even better, actually. So as a solo owner of a business, you get the solo 401k, which means you don't only get $19,500. You get $58,000 as a tax deduction every single year. Which means if you're not sure or don't need, after you run your bookkeeping, that money at this current point, that's a $58,000 tax deduction on this year's taxes. And guess what? If your spouse also worked with you in your agency or your coaching business, that number doubles. So that's $116,000 you can potentially put away, and basically, in a way, just shelter that from your taxes this year. Hugely powerful. $116,000, guys, if you just work with your spouse, or half of that, which is $58,000 if you're just by yourself. So this is something you definitely don't want to miss out on. Look into it, Google it, if you want right now. It's very powerful. The second thing we want to talk about is HSA, right? HSA stands for Health Saving Account. And as business owners, you guys can definitely enroll in this program. And it's what they call a triple threat deduction. It really is triple deduction, which means when you put money into a HSA account, it doesn't get taxed. As your money grows, it doesn't get taxed. And when you take it out at the end for medical purposes, medical expense purposes, it does not get taxed. So there's 3 stages where this does not get taxed, which is why it's one of the most tax positive accounts or business strategies you guys can look into. Oh, sorry, I should go back a little bit. Oh, health saving account is basically an account you can set up to put some of your money away, kind of like 401k, but for the purpose of health care costs, medical costs, right? So if you're from the US, healthcare costs is crazy here, right? Especially if you're a business owner, you're probably very worried about, if you do get sick, how are you going to pay for your medical costs, right? So an HSA plan basically says you can put money away, and then if you do need to use it, you can just take money out of HSA tax-free to pay for your medical bills. But then if you don't need it, like you're a healthy person, you're in your 20s, right? So you're just like the 21-year-old agency owner, you're super healthy, you probably won't need more than one doctor visit a year till you're in your 30s. This is something you need to set up right now. This is something you can put away, I believe $6,000 a year, and just let that money grow. It's basically almost like an investment account, if you will. You basically let this put in a fund or stocks or anything you want, and just let that money grow. And then at the end of the day, when you really do need it when you're older, this money can be taken out tax-free for any and all medical costs that you may inherit as you age and as you grow older, your 40s, 50s, or, you're just in a foreign country and they don't have the best healthcare program, right? And then you pay a lot out of pocket. So these are two things I think you guys really should look into for your business. Next, we have the home office deductions. So with with COVID, or just, because you guys are running agencies, you guys probably don't need to be in a office, I would say, unless you guys are big enough, have tons of employees and VAs and just want that connection with them, right? But otherwise, if you're working from home, the home office deduction is something that you guys really need to look into if you haven't. And this is something that can be very small or very big. It really depends on your tolerance or who's helping you with your taxes, because there's two methods of calculating it. There's a simplified way, and then there's an actual expense way. And I'm going to briefly go over both. The simple way is very easy. Simple way is just saying how many square foot you're using for your business. It's up to 300 square foot. And you can use 300 times $5. $5 is the rate set by the IRS. And so say you're using, like your office, well, Lloyd's using his home office right now for his business, and it's 300 square feet, right? And that means he can take 300 times 5, which is a $1,500 deduction. Not bad. It's okay, right? So that's the shortcut way. If you guys don't have any time to figure out your tax situation, take it. Take the 1,500. Better than nothing, right? But the actual expense way involves a lot more calculations, but it's something that we always check and make sure that they qualify for at these clients that we work for. But basically, the actual expense way is saying, take a percentage of how much of your home that you use for your business. So for example, if you have a home that's 1,500 square feet and you use 500 square feet for it because you have, you're an eCom business, you actually you use all that room, right? But there's a point I want to point out. It has to be exclusively used for your business. The IRS will make sure it is. So you can't use it as a daycare, and the living room is not a good situation. So you actually want an office space, right? But say it is 500 square feet, right? So what they're saying is, if that's the case, you can take 500 divided by 1,500, which is 33% of all your home utilities, mortgage payment or rent payments, any kind of repair and maintenance you do. Say you want to paint your house, you can take 3% of that. Say your water heater broke, you can take 33% of that as a tax deduction. And then if it's something that's just related to your home office, right? Like say you just want to paint the office you're in, then that's 100% deduction. So if you paid like $2,000 to paint your wall, your home office, you want it to be green because you think that'll wake you up more, give you more motivated. Sure. That's the full deduction for you that you can take right now. So as you can see, these numbers I'm throwing out at you, it's a lot more than if you just did the simplified method, right? So a lot of time clients can actually get a very significant amount of deduction just with this, just with figuring out this and just plan around this, right? If this is something that you can, if you have a big enough space where you're like, yeah, next year starting out, I'm going to occupy more of my space for my home office. I'm actually going to move my operation to my home office and just work out there. So then, everyone just at my home office, and I will take up 1,000 square feet of my home, and I'll just exclusively use it for my home office. So there's a lot of things. That's what we teach them on how they can, the most positive way of how they can get away with that and be able to do that for them. So something definitely you want to go and look into. And lastly, we want to also talk about state taxes and nexus migration, right? So this is a very big topic. So I'm not gonna bore you guys and talk about everything about it. But basically, as you guys are running online businesses, there's two things you got to know about. One is across the United States, as you can see on this map, tax rates are everywhere, right? Not only tax rates are everywhere, sales tax rates are everywhere, and it's just kind of crazy. But you can see there's some gray states. Yeah. So one thing we always encourage people is, like, if you're mobile, if you don't have a family like I do, if you're able to, relocate your business to a spot where, the rates are lower or even 0%, you should do that, as a domestic business in the States. And as international business, that's even better. International, you don't have to move. You guys are already international, right? You can just say, I want to incorporate in Wyoming. I want to incorporate in South Dakota, But as a domestic agency owner, you want to say, I'm living in California, but I'm running everything in the cloud. All my clients are in the cloud. They're not going to know the difference if I'm in Nevada or Washington. That's make no difference. I'm still in the same time zone even, right? So that's something we want people to look into. And like I mentioned, otherwise, you guys are digital nomads, right? That's, I think, the whole point of you guys not wanting to do this is you don't want to be tied down to a 9 to 5. And if that's the case, you guys should be looking at the foreign earned income exclusion that one of the testimonial we went over for Adrian did, right? He moved to Japan for all 12 months of the year because he knew that he can qualify for this. So he gets the foreign income to income, and that's 109,000 of the revenue he earned that he's not going to get taxed on. Pretty amazing, really. So this is what we kind of always emphasize to our clients, like, hey, you're in this state, but why? Is there a reason that's tying you down? Sometimes there is. Sometimes this is not something that applies. Sometimes like, yeah, I have to be in the state of Florida because of so reason. I want to be near family, all that. That's fine. We respect that, of course. But if there's not a reason like that, that's saying I have to be somewhere, please look into this. Okay. And then I'm not gonna go over all these, but it's just kind of to, again, open your eyes on all the things that's out there available to you, right? These are 9 tax credits that can possibly apply to your situation. I'm not gonna say they all do, but these do not. But look into them, see if they apply to your situation. I'll just point out one, number 4, the pay sick and family leave COVID credit. This was big for some of our business owners out there last year. They're able to basically claim a COVID credit because they were scared about the health of their family members, so they took a week off to take care of their family members, and the government recognized that, right? A lot of times, older people need to be taken care of, and there's no one to do that. So this is actually a credit that you can claim for taking time off from your business to either take care of your own health for a week or 2 weeks, or take care of the health of your family members. So the government recognized that if you had to do that, you may be losing out income that you can earn for your business, right? You may have to shut it down for a little bit or not take on new clients. So they reward you for that. They're saying, yeah, we'll give you back a couple $1,000s of tax credit, and here you go. And this is very powerful. I know this is not a tax class, so I didn't go very in depth on a lot of tax terms, but the difference between a credit and a tax deduction is a tax deduction is a marginal deduction on your revenue, right? It's like your tax rate is, say, 30%, then you get 30% reduction of it. But credit is 1-for-1, right? It's straight. If you get $2,000 tax credit, if your tax liability says $5,000, it's straight up, you get $2,000 off, and you only pay $3,000. So this was huge. Finding these little, I'll say, tax credits is huge. You don't want to not have someone go through a list with you and say, do I qualify? Do I not? You don't want to not know this, and that's, again, giving free money away once again. Okay. Now we move on to number 2. So a lot of you guys out there who are maybe international agency owners are like, a lot of things Alan talked about doesn't apply to me, right? And this is why we want to focus number 2 on you guys out there who are international agency owners. And we want to talk about how you guys can actually massively benefit from having a US LLC entity, okay? I know that's, for some of you guys there, it may not apply. It may not be something that you want to go into because you're like, I'm in a very business-friendly country, but let me just go over why this might be important to you, okay? And then you guys can decide on yourself. So for international sellers, here's kind of benefits of having a US LLC. One is, of course, reputation and trust, okay? The US, despite its somewhat shaky reputation at times, is still one of the most trusted countries in the world. As far as their banking system, as far as just legitimacy, as far as just be able to tell someone, hey, yep, I run my business, I have a business entity in the US, right? So trust and reputation and trust is a huge reason why you may want to have this, right? It's basically to tell people that, hey, I have a US business, like I run my business through the US. That just screams legitimacy to a lot of people rather than whatever XX home country you're from, right? Number 2 is a huge point that we emphasize to a lot of international clients is the foreign exchange rate profit, right? When you're running an international business, oftentimes if you have a lot of US clients, they're probably paying you in USD. And then what you're gonna have to do is eat the transaction fee, first of all, right? And then on a second level, when you finally transfer that money to your home bank account, that's probably in a different currency, Singapore dollars, Hong Kong dollars, whatever it is, you probably lose out another percentage after that. So the advantage of having a US LLC is you can keep all that money in USD. If you open a US bank account, you can keep it on USD and just spend money through that account to pay for your expenses that you may need to pay. So everything stays in one currency. And this we saw as much as 5 to 10% swing in the bottom line profitability, just because someone does this rather than go through all the transfer pricing, all the pricing exchange rate loss that they get. And the third point is on credit card points. From what I'm told and experience from talking to clients from different countries, US has one of the best credit card reward systems in the world. I have clients who spend 100K a month on ads, and they can get like 4x points, which is like 400,000 points a month in a year. And a year, that's around like what, $5 million to spend on first class flights, hotels, or even cash back for themselves. And the value of 5 million points, that's like $50,000. Like, how would you guys like to have another $50,000 back as profit for your business? It really does add up. If you're pretty high end business. And then the last thing is, this I'm going to caveat, what we do for CPAs, like it really depends on your situation. But even though I know a lot of you guys are probably worried about this last point is, hey, I have a US LLC, but do I have to pay, even more money now because I'm recognizing US money to the government? And that's a yes and no question. That a lot depend on your nexus. And what does nexus mean? That means your affiliation or connection to the US, right? So a lot of time what IRS look for is like, hey, does this guy running at 100% remote business and just have the US LLC? Or do they, if they're running eCom business, do they have a warehouse in a state, in the state of Wisconsin? Do they have actually an agency on the ground? Do they have like a huge network of affiliate partners on the ground, right? Those things will create some tax obligations. But if you guys are just running a business purely outside the US, you guys are non-residents of the US, and you're just resident of your country, a lot of time what happens is there's tax treaties among different countries that will make sure that you don't have to double pay on your taxes, right? So that situation varies. I'll definitely recommend you talk to a professional if that applies to you. Okay, lastly, third secret, not really a secret, but it's really important for you guys to educate yourself on, is how to create other streams of revenue from the healthy cash flow you earn from your coaching credit business. And this really applies to you much more than I'll say the ecom side. So you guys get to keep a much healthier profit margin, right? And you just want to make sure that that's the case for a very long time. So, after you have stabilized, you're growing your business and creating lots of healthy cash flow after, a few years, you can actually use the money you made in your business to actually reinvest to produce passive form of income, right? You can put it in stock, you can put it in Forex, you also buy real estate, right? Real estate is actually the recommended path, actually for us when we recommend people. Basically, you get to buy real estate, maybe use it as rental income, and then you get a lot of important tax deductions for real estate. The IRS is very generous about that. Property tax, your mortgage, and basically it almost acts as a tax, like a shield, because you're actually using your cash to generate more cash flow, right? Rental income tax flow. It's another form of income for you. So it creates that diversification and takes away the risk of you just depending on one source of income. Very, very powerful. Something you guys should look into. And there's a key term I want you guys to know about, which is like-kind exchange. It's too complicated to explain it fully in this webinar, but basically it's a way that says, a lot of times people come to us like, do I need to sell it? Like, what happens when I sell my real estate? What happens? Do I get hit with a big tax bill? Well, what like-kind exchange is, it's basically a tax law that says, if you're able to find a similar business to yours, similar real estate, what you can do is almost like trading, almost like Pokemon. You can trade your business with another business, and because no cash exchange hands, there's no tax obligations. It only happens when you're making a profit. Like the IRS only looks for when you have a capital gain is when you get tax on. But if you're just exchanging a real estate you don't want for another one, no cash change hands. So something for you to look into, if it applies to you and you're looking more into real estate. And then other forms, of course, of acquiring other streams of income is, of course, investing into other companies through M&A, right? If you guys are at a cash flow level where you guys are doing really well, and you have the money to, say, buy a small agency that focuses on another niche or another coaching program or a course that someone's running, and you're like, yeah, I just want to diversify, so I have other streams of income out there, right? This is something you guys can look into, mergers and acquisitions, buying companies with synergies to yours, and look for exit opportunities and selling your company. That's another form that you can look into. My partner Stanford has a lot more experience into this. So if you ever want to get him online, and this is something that it's at the point in business where you're really focused on, I'll definitely recommend talking to a professional on how you can set up your business to sell in the next 3 to 5 years. So that's a lot of information for you guys out there. So I just want to give a summary of everything I have talked about so far. Basically, number one, first point is just maximize your tax deduction. Please, guys, tax deduction. Don't let the government steal your money. Like I know you guys out there are very hardworking guys, agencies, really putting in the hours, hustling, motivating to work at it. And then how would that feel at the end of the day if you're like, I had to use this huge tax bill? Was it really worth it? Me running this business and me having to pay out half of it to the government. It's probably not, right? You probably feel pretty deflated if that's the case. And number two is, just pay yourself and keep money in your company to reduce tax payable. And that point only applies, of course, like I said, if you do want to restructure to an S Corp or maybe even a C Corp, if you guys are big enough out there. And what you can do in those cases is, you can pay yourself a salary outside of your business. And when you're paying yourself a salary, there's different ways where you can shield the remaining money in your company away from taxation. Or there's also different ways of looking at how to shield the income you're taking out, because depending on how you're drawing the money in your company also matters. If you're just taking it as owner draw, matters. If you're taking it as a salary, matters of an employee of the company. If you're taking it as a dividend, if you're actually giving dividend away from your company, that matters. And they all have different tax rate that applies to them. So you should find a way that's most efficient, right? And number three is just keep your books clean. Okay. Always be ready for an audit. Like that's the scariest thing that you can have is, if you do get faced with an IRS audit, are you ready for it? Or are you just going to panic? I don't want you guys to panic. I want you guys to be educated out there and know what to expect and know what they're expecting. They're expecting your books to be clean. They're not going to waste their time waiting for you to pull this report from here, pulling this report from here. It's like, yeah, this is why I got my Facebook data. This is why I can take this action. Oh yeah, I have these receipts I don't want to give you. No. They don't want to look like you got your, excuse my language, your shit together. They want to make sure you have everything in one place. They want to make sure you can show them clean bookkeeping, clean reporting, so then they're ready to, help, be ready to say, yeah, this guy's running a legitimate business. We're good, green light. And once they know that you guys are running a competent business, they usually don't come back and bother you again. So that's something important to remember if you ever have to go do that. Keep your books clean. It's not just done for the purpose of you. It's done for the purpose of a lot of third party that looks for it. If you guys ever go do an exit, they're gonna want to. That's part of the due diligence process. Is they're gonna look for this. Okay, cool. So that's everything. Anybody have any questions? Lloyd, do you have any questions for me? Feel free to ask here. I'm here to help you guys, of course. If you have anything for me, you can feel free to leave a comment or and any of the channels you guys may be watching this in. I'll be happy to, send you guys a reply back or DM and help you guys answer.
Yeah, thanks for that, Alan. Really, really awesome content. And everyone, I'm sure, is appreciative, and they've learned definitely about stuff that they otherwise would not have known. We are out of time. So if there are any questions, I can just direct them towards you afterwards over email. But yeah, if anyone wants to reach out, I'll be actually leaving the contact information for Alan as well, where you can find it, whether it be inside the back end of the course or inside the Facebook group. But with that being said, have a great weekend, everyone, and chat with you guys later.
Yeah, thank you so much, Lloyd, for inviting me on the call. Had a great time.
Cool. And 1 second.